Russia and Ukraine. It's a hot topic at the moment, and I wanted to have a quick look at it. I haven't done a video for a couple of weeks just because the building besides me is getting a lot of work done and it's very loud. But at the moment, it's quite quiet, so being able to get a little bit of time in just to do a video. Um, I'll quickly explain what's going on in this video with the Russia-Ukraine situation. We'll have a look at the markets. Everything is down. I'm down this year, and it just seems to be getting worse and worse and worse and worse. It's just constantly falling. Every time I look at this, it's always a negative red, and that's on most of the markets, apart from commodities, which are doing really well. And as a result, I think that this could probably be one of the saviours for my portfolios that I hold, because right now I don't think it's just good for anybody. Morally, ethically, financially, what is going on is just not good. And I just wanted to have a look at that today, see what could play out from this, how we could look at it from a market view, and how we could even look at it from a political point of view as well. It's the 24th of February. My name's Tyrone, and you're watching Mini Pip. I'll jump straight into the video. I'll try and explain what's going on. So what you've got is Russia over here. You've got Putin, who has recognised Ukraine's these two states here, which are independent states. They're like separatist states. He's viewed these as actual sort of places, and he has essentially invaded Ukraine from here. And the way I see this is he took Crimea in 2014, which gives access to the Black Sea here, which when you go through Turkey, Istanbul, gives you access to the wider European borders and stuff like that, so you can do more trade. And so it doesn't make sense. It's out of order, but because of the size of Russia and the size of Ukraine, Russia's basically coming in by force, and they're able to capture these cities here, which is going to give them more access and better access to the Black Sea, which gives them access to the Mediterranean Sea and then Africa and other countries as well. And that it's a political thing that he's doing. So these two states which are here, which is Donetsk and Lufthansa, I think, he's taken them over. He says it's a peacekeeping mission, but by the sounds of it, people are dying. So I wouldn't really call it a peacekeeping mission. The worry now is, one of the issues as well is that these countries here, Belarus is excluded from that, but all of the European Union countries, they don't view these states, they view this as Ukraine. So therefore this is, in the European Union eyes and in USA's eyes, this is actually an attack on Ukraine into their state. And the worry now is that how far is Russia going to go? Sanctions have been put on, so the Nord Stream 2 to Germany, which runs around here, that has been not cancelled, but it's been postponed, and they're basically saying that they won't do it. It will supply around $15 billion a year to Gazprom. And I reckon that if we look at the Gazprom stock, I could probably imagine, it's tanked, because it's going to do a lot of damage to especially the Russian stocks. I wouldn't even go near them at the moment. One of the banks, I think I saw it earlier, it's down 60. Bank of Russia. It's probably one of the I think it's one of the bigger banks of Russia. It's like the Lloyd's Bank of Russia, and it's down 63% today. It's bizarre. That's a very, very big drop. That being said, it has been this low before, back in 2014. But anyways, back to what's going on. The reason that this is happening is I think it's Russia trying to get a better access to trade. They understand as well that there was a few treaties in 2014 as they did something like this when they took Crimea. But it's barely a political thing. And these two countries have been fighting for a while. On Moscow's side, you have China, you have Kazakhstan, Belarus as well. So it's quite a big thing because you have the NATO issue. Oh, that was another thing as well. Moscow doesn't want Ukraine or Putin doesn't want Ukraine to join NATO, and if they do, he's basically saying, look, don't do that, because he sees it as a threat, which I kind of get, because NATO is a northern Eastern alliance, so getting more of these countries in. Russia is probably seeing that as a threat, because as NATO grows, their army and their forces grow. Russia is one of the biggest countries in the world, and it has the biggest army, one of the biggest armies in the world, so they're going to see that as an issue. But I would think that in 2022 that really shouldn't be an issue, because we're not living in the 40s and the 50s. This could be quite a big war if it really does break out. I don't think NATO will get involved, but they'll probably do heavy sanctions on Russia. They already have done, and there's plenty of videos on YouTube about that. Heading over to the charts and what's going on, it's pretty terrible. Most of your index funds are down for the year. One that's actually doing not too bad is the FTSE, and that's because FTSE's quite it's a lot of banks weigh quite heavy on the FTSE. So obviously pre these tensions, with interest rates going up, it was the assumption was that banks could potentially make more. You also have pharmaceuticals in there, which obviously still doing quite well. So the FTSE is not doing too bad in comparison to, say, the DAX, which is down quite a lot. From the highs up here, it's down, at one point was down 15%, it's down 13% at the moment. It sits at the moving average, the 100 period moving average on the weekly. The Nasdaq is getting absolutely hammered, it is down around 20%. But again, we're sitting at that 100 period moving average. The Dow Jones, we are a little bit far off from that period moving average, so there's definitely a potential or possibility that we could see this fall a little bit further. I would still, same with the S&P 500. I would still be a buyer on the dips, because even if we look at history and what's happened in the past, we've seen these drops in the past where markets have gone down 12% here, 15% here. The markets dropped 11% here, and then obviously in the pandemic they dropped further. In 2018 they dropped 17%. We had the large fall here, obviously, which recovered, which was the COVID lows. And at the moment, we just have this other dip here, which is currently down 13. We could easily drop to sub 4,000 on the S&P 500. We could see the Nasdaq drop to 12,000, and it continue lower. It's not an issue, provided that I think if you're averaging down your positions, you're going to be better. If you've bought up here on the assumption that we're going to continue higher towards 20,000, I can understand why you would do that. Come the start of the year, everyone's panicked and the markets have dropped. If you choose to leave that position up here, then yeah, it's going to take you longer to recover. But if you're buying every month, you're putting money into index funds, £500 a month or £400 into the index funds or whatever, you're going to average down that position unless you've been buying for a long time. You're still going to be averaging down that position, and over time I do think the markets will recover. It is healthy for a market to decline. Unfortunately, it's unhealthy as to why it's declining. It's not a good situation to be in, because it is a loss of life, but it is what it is. Looking at the FX markets, the currency markets, I don't really cover these often. You're going to have a lot of tension on a lot of the euro, on the euro, on the pound. There's going to be a lot of tensions on those, because the US dollar is going to go up in value because it's a safe haven currency. The ruble, don't even talk about it, is going to get absolutely hammered all over. So anything that is dealt with in Russian currency is just going to get hammered. I wouldn't even touch it, and I don't even want to look at it. Looking at shares, we've got certain stocks that are just getting hammered. You've got Tesla, which is down from 1,200 to 725. Potentially, people are coming to realise that it was an overvalued stock. I still think it'll go up in the future. I definitely think it will. You've got companies like BP, which I actually looked at BP the other week, and I thought that they would do quite well, but this tension stuff has obviously caused the opposite effect. I think that in the short term, BP could come down because of that geopolitical tensions, and obviously there's probably some Russian dealt issues with BP. I don't know, they could be in some of their waters, drilling in their waters or whatever. So you could have that short term decline, but one of the reasons why I don't think BP will do bad is because of the price of oil. We are seeing, and as I'm recording this, oil is literally touching $100, and I had been looking at oil for the last 2 weeks now, saying that it was going to get there. I was very confident it was going to get there, and even if we declined, I still would have been a buyer, and we've had that today where we've passed $100. Now, A lot of people are talking about inflation and about the way it is at the moment in this country, in the UK. It's like 5-6%. But just looking at oil for a moment, and this is quite an important factor. In 2014 to 2011 to 2014, we had oil sitting at 120 to $90 a barrel, and we also had that same price in 2008. And I get that 2008 was a crisis and we saw that massive drop. But if we can have oil prices between 2011 and 2014, between this 100 to 120, we can definitely have prices at that level right now. Adjusted for inflation, prices would be up here around 140 to 160 at all-time highs. And I see no reason why, especially with the Russian tensions and gas as well, we'll look at gas in a second, this could definitely fling a lot higher towards 120, and it could sit up here and it could continue higher. The Russian tensions is going to cause banks to pull back a little bit, I think, on interest rate hikes, because they know that if the sanctions that they're going to put in place are going to cause prices to go up even more, which is going to cause more prices to the consumer prices, so your gas, your electricity, whatever, that's going to go up even more. But the problem is, if you start to hike interest rates as well, you're going to make things even more expensive. So right now, I think the governments are in a bit of a tough situation. This type of tension is probably going to delay interest rates a little bit, or it's going to slow down the rate of which they rise. It was forecasted about 3-4 weeks ago, when the tensions wasn't too bad, that rates was only going to go up 0.25%, and now it's 0.5% in the USA, and now it's probably going to be 0.25, could even be delayed. Gold is another market which I did a post on not too long ago, on the 21st of February. I was looking at gold, and I could see a justification for this going back to the all-time highs. People are worried. When I looked at this, we was reading at 1,898. We're now sitting at 1,945, and you could definitely see that go high towards that $2,000 level, and then potentially 2,200. There isn't a reason for that, and it's quite interesting just looking at the crypto market as well. A lot of people said that Bitcoin and Ethereum is an offset, it's a risk-off asset. That doesn't seem to be the case at this moment in time, which is quite interesting. You've got a lot of these cryptos down as well. But I don't really cover crypto. I do it. I do trade. I do invest in it. But I mine it as opposed to buying, trying to speculate the price. Back to the commodities though. Gas is another commodity which I think is going to go through the roof. It was able to go through the roof in October. Apologies. It was able to go through go really high in October. And we spiked as well in February. Nord Stream 2 and Russia and Germany, they have a massive alliance in terms of gas. I think it's like 20% of gas supplied to Russia, especially in Germany's supply to European Union is from Russia. It's around 20%. So I think that if you're cancelling Nord Stream, one of the sanctions that Russia could turn around and say, well, we'll stop supplying your gas, we'll slow the supply down, you're going to see this go through the roof. Now, this is a US contract, and the reason that the US contract would go up as opposed to the European contract is because you're going to see more demand for the US product, it being shipped in. But this, if you probably looked at the European charts, which IG don't provide, you will see gas is like up here at the moment, like flying through its all-time highs, whereas the US gas isn't, because they do have a lot of it and because they produce it themselves. But given the tensions, it makes sense for the European Union to turn to the USA to look for alternative supplies, which is going to cause the demand to go up, which is going to cause this likely to go up. It is cold still, and I reckon by March, April it's going to get warmer, but you could still see another spike before we potentially go down. I do think that gas should come down over time, but again, looking at the history of the charts, you can see that in 2004 to 2008 we sat at this level, and at one point we had these huge spikes in gas, and we've been to these levels before, so we could definitely get there up again. I was initially short and trying to short gas, but now that Russia has invaded, I would much rather be long at this moment in time at these levels, and I'd probably want to be shorting between 6,000 and 8,000 if we get there. looking at the chart, it does look like we're going to get there. I don't know if it's going to do that, but I would rather be long at these levels as opposed to short, especially with these tensions. We've got a lot of other alternative things. Wheat is up insanely high. All your commodities are up insanely high, and this is just going to come down, and it's just going to be a cost to us that we're going to see in our pockets. You're going to see things go up in price. Copper as well is up. You've got aluminium, which I looked at a couple of weeks back. Which was up as well, and I think it was around here that I posted around 3,000 ton, and we're now 3,400. So we're about 15% on that, which is somewhere on here, probably a bit further back. But anyways, so that's aluminium. Nickel as well, same situation with nickel. All of the base metals are going to be going up. So overall, it's not looking great. In terms of what to do and how to play this out, you're probably best. I'm not an advisor. I'm not saying you how to do or what to do, but in my opinion, you see prices of oil or petrol going up, so you would be buying crude oil to try and offset that. Even if you make £50 on the trade or £30 on the trade, it's offsetting a tank of petrol in your car. For instance, if you're long on IAG or you're long on airlines, higher fuel prices followed by a lower demand is just not good. It's a terrible recipe. And I even looked at IAG the other week, and we was in an uptrend, and we've just absolutely broken that right now. This week we're down 10% on IAG, and with the high fuel prices, it's just not good for it. It's a terrible recipe. So to offset that, you can either try and go short on a trading account, or you could buy the commodity in which is causing the cost to go up, which in the case of IAG would be oil. That would be your hedge. That would be your hedge against that. I'm not saying to do that, but that would be your hedge against it. And it's the same, with most airlines, EasyJet as well, or Ryanair. Overall, it's a terrible situation to be in. I think most people are down this year. I wouldn't give up faith. I wouldn't run away from the markets. This happens. It happens every year. There are terrible times when the markets will fall 5, 10, 15%, but they will most likely recover in the long term. So provided that you're either trying to hedge, make money through the trading point of view, or if you're just trying to buy as you're falling, averaging down your positions, you should be okay over the long term, I would like to think. Overall, the situation still remains to be a buy. We could have a couple of months, or even this year could be a bad year, and then 2023, 2024 could be a great year, or great years onwards. I would say that if you're interested in this type of stuff or you want to follow it, I have Mini Pip's website, and we have loads of information on here, which is all free. We don't all our services are free. We don't charge for them. Anything about how technical analysis works, trading, investing, basics, economics. We're going to look at a bit of personal finance, so mortgages, savings, stuff like that. We've got analysis on all of the shares, indices, commodities, and we have some trading tools as well. It's the 24th of February. If you like this video, please subscribe. It helps us out. Thanks for watching.